Hello everyone, it's me the Boss Hog. We're back with another portfolio update as well as a health and betterment update. Also, I'm quite pleased with the title for this video. I'm not even a Harry Potter fan, but I just thought this was a nice thing. We will be talking only about 5 minutes on each of these. It's not going to be a huge deep dive, but I would like to explain why I think that these were the standouts of the earnings results that at least I'm familiar with. And I'll also give my opinion about why I think Alphabet was the strongest and the most buy-worthy of these three. And then we'll look at how we're performing, which is broadly speaking solid, definitely up for the week, and definitely just about keeping up with the S&P 500 still. Let's do it. Okay, so first up, looking at changes last week. Honestly, a really boring week. I actually didn't even expect to receive any dividends, and I always forget about the dividends from my ETFs. So I did actually receive a pretty okay dividend, £38.20, from my S&P Small Cap 600 ETF. I'm up modestly on this, actually up quite solidly before I have a negative from my FX, but now actually a few percent in the green. So I decided instead of keeping it in the iShares to instead put it into my global infrastructure. I have a much smaller position here and I'm down a couple of percent, so I just decided to take advantage of that fact and move it across. But honestly, the only transactions I did this week for that, it was expectedly boring, I suppose, but yeah, not much more to add other than that. So in terms of how we performed last week, honestly, it was another pretty solid week, I would say. My portfolio now is at all-time highs. I was within a smidge of being at all-time high in terms of my profit on, I think it was Wednesday, but then some unfavourable FX and a few things gave up some recent gains. So we didn't quite get there, but it was pretty close. Broadly speaking, though, yeah, very solid week, and profit now back up to 17,000. So even with a bit of a pullback that I saw on Thursday in particular, still really solid week on week. And if I just do a quick little zoom through everything else that's been happening, kind of see here on the all-time high portfolio value. Again, we continue to track the S&P pretty well in terms of performance. I'm personally super happy. Like during the middle of the week, the pound actually started to, let me get this right around, to weaken, which is a good sign, a good thing for me basically. But then it also then strengthened toward the end of the week. So then at one stage I thought I was actually going to overtake the S&P, but it wasn't quite to be. But still pretty close over there, as you can see, and I remain quite happy with that graph. Likewise as well here, the portfolio over time now is actually starting to show some really good coloration other than just green, right, which is my capital. So both in terms of the growth, which is basically the stocks itself, has it capitally grown, and then my dividend as well, which should hopefully grow over time. And you can see here as well, looks so close on my profit over time to being at all-time high, but couldn't quite make it. However, Amcor had a pretty solid week. I couldn't find any news for this. I did have a little bit of a look, and I did see as well that ASML and a bunch of other semis also had a good week, so I'm just assuming that it was kind of market-driven. Amcor does report numbers next week, so I'll be having a look into those numbers. So it could be that something leaked out or something, but again, I'm relatively of the opinion that it was in fact just the market. But that now puts them back into first position, especially because Gamma continues to go nowhere particularly fast. And in fairness, Genius seems to be sort of consolidating now around the 750 to 770 kind of mark. I think, to be honest with you, that's about where it should be. A couple of weeks ago, I sold about 10% of my position in this company, specifically the stuff that didn't sit in my tax-advantaged ISA. But we're going to be keeping the 2,000. I sold about 220 at 752. And again, I think right now it's probably up with events. It's reporting, I think, in 2 weeks, not next week, the week after. So we'll see how those numbers look. But so far, it's going pretty well as it sort of targets profitability next year. Outside of that, I did want to talk about Games Workshop to start with, so I may as well start with them. They released their numbers. Nothing too surprising, and to be honest with you, they did a trading update a couple of months ago, so it was broadly as expected from that trading update. So £471 million in revenue and 171 million in net profit, so an incredible 36% margin. They declared 145p dividend, which puts their yearly dividend of 415p, and that's actually up 77%, so a huge increase. Now, Games Workshop don't really have a progressive dividend policy or anything like that. They always talk about truly surplus capital, but in essence now the business is really starting to throw off cash, and across like a £4 per year dividend on a £116 share price, it's actually a pretty chunky dividend yield, I would say. Margins were down fractionally, but honestly, I mean, gross profit margins still at 36%, a gross profit margins are sort of at 70%. So although they both went down very fractionally, it was still really solid. And again, no one really picked on it too much. Also, as well, return on capital employed is monstrous and really impressive, as are most of their financial metrics. I'd also point out as well a couple of things. Firstly, that their H2 was significantly better than their H1. It hasn't been widely reported, and you do have to kind of delve quite far into the numbers to spot it. But there was a notable increase, and I think what's especially telling is that H2 basically had what's called their 10th edition. So every sort of 3 to 4 years, they do like a massive launch of a new storyline. This is their 10th one, and it was incredibly well received as far as I can tell from what I've watched and read, as well as sort of across the the fan base. Really well received. I think as well, importantly, like I've been following Games Workshop now basically since day one that I started investing, so the better part of 3 years. And I think the big change has been over the last couple of years. You can tell in each report they've basically been saying our CRM is causing us a problem. The portal that customers place orders on has been causing us a problem. This time, zero mention, other than the fact that they basically had record orders placed through that route, and likewise as well, most people were expecting that all of their orders for the 10th edition were going to be a problem. Broadly speaking, it was very smooth, so that's very encouraging, actually, I would say. And the other thing I think that's worth mentioning here, a lot of the articles that I read, they'd be like, Games Workshop at record revenue or record profit because of the Amazon deal. Like, I think this is complete lack of understanding. Like, the Amazon deal so far has produced literally zero, like none, appreciable revenue or profit because of that deal, right? Maybe a few more people are aware of it as kind of a universe or a company than they would have been beforehand. But broadly speaking, if you're aware of Games Workshop before, you're aware of Games Workshop now. And there's been no output yet. And in fairness, although it's very exciting because, Henry Cavill himself, who's a massive Warhammer fan, is, meant to be executive producer and all of that. So far, they're still working out which story they want to actually tell, and probably working on the commercials as well, because in fairness, Games Workshop are incredibly guarded about their commercials, but of course, an opportunity like Amazon, they're almost certainly going to relax them a little bit. So I'm always curious to see what that will look like. And to be honest, my opinion at the moment is, even though Games Workshop is an extremely high quality company, I probably wouldn't be buying at this level. Like my price target is £120, so pretty close to that. And when you actually look at its PE ratio at the moment, it's like 27, 28. It's a really good company. It's got profit margins that are equal to Apple. It's got a really strong moat because it's basically its own product, its own universe, the paint and the products that it produces. And in fairness, the lore as well, the actual stories are amazing. Really strong from that perspective, but it's just already up with events, basically. And I am a little bit tempted to trim my position just a tad and take some profit. But the thing is, I just can't really see anything that I want to spend my money on. And it yields so well that I'm just happy to enjoy, my £100 income per quarter basically at the moment, and enjoy that for what it is. So, yeah, very strong numbers, I would say. Not a huge amount of surprise. And the share price, it was interesting. It did actually go down slightly when it was first announced and then recovered almost immediately. Like, I'm not sure if people expected more or what the takeaway was. There was some concern, I guess. Maybe people expected more, especially once you did it on a constant currency conversion. I was personally pretty happy. And I've spoken before, but just to reiterate, like Games Workshop over the last couple of years have invested heavily on new machines, new paint workshops, new warehouses, new everything basically, including new portal, new CRM system, etc. And for me, I feel like a lot of their heavy lifting has now been done. I actually expect them to sort of start rebuilding on their margins if they wanted to, or potentially reduce their pretty obscene margins and target slightly more sales. I think it's going to be interesting in the direction they go. I would also highlight as well that license revenue was down very slightly. License revenue only accounts for about 26 million of their 471, but it's about 95% profit margin, so even more obscene than their other stuff. But again, it's a little bit chunky, and it is what it is. I didn't think it was bad, and I'm kind of more interested actually in the core business, which I think is rock solid. And yeah, we just continue to hold this and enjoy it basically. Next up, I did want to talk about my ETF in the US banks. This has been going really well over the last month. I'm comfortably green now, actually. I have a 436 buy price, so that's nice, although again being impacted by FX is what it is. But I would say that a lot of the banks kind of are sharing some similarities, which is big increases in their net interest margin in particular, which is to be expected with the rates what they are. Although many of them are increasing their provisions for bad debt and that kind of stuff, so there's obviously still some worries from that perspective. But broadly speaking, I've been pretty encouraged. I would caveat that by saying that some of the investment banks have been dreadful numbers, but sort of the more standard commercial and retail banks have been really solid. So actually, I'm quite excited about this as well. I did consider adding to this position a little bit just because I wasn't as brave as I could have been when I was following this town, right, when Silicon Valley was going and a few others looked like they might go as well. I could have been a little bit braver, but I didn't want to get myself into a position with, say, like Gamma or Genius, where I kind of bought too early and ended up with humongous stake that, has taken me years to get out of the red on. But I did have opportunities to buy this at like 360 and didn't buy as aggressively as I could, so I was like, ah. But now I think actually I'm quite happy with the size of my position, and I'm just going to hopefully enjoy it as it runs up. And if it goes down back underneath $4, then we'll look at this again. But for now, I'm sort of broadly happy with my position and how things are looking over there. Next up, we got Google here. I did want to talk about them because actually I think of the three companies that I put on my thumbnail, Google's was the most impressive, I would say. And it starts not super impressive, like revenue up 7%. Like, okay, that's solid because it's a big company, right? And then it's like, well, ad revenue was only up 3.3%, which is, again, not amazing, but the market seemed to interpret this that it was resilient, especially compared to sort of some other peers and competitors who got absolutely brutalized from an ad revenue perspective. Many people also pointed out that Google is sort of a third of all of the ad tech market, so it's got an extremely powerful position and sort of the data and the technical nuance and skills to be able to leverage it. So although it was a bit disappointing, some of the numbers on sort of ad revenue specifically, it was sort of seen as resilient. Core search, likewise, which has come under a little bit of sort of bearish arguments, was also seen as pretty solid, up 5%. I think the real standouts here, though, were twofold. First of all, maybe even threefold, but I'll start with the big two, which was cloud revenue, especially the revenue growing faster than expenses for the first time ever, as far as I'm aware, was a real standout. They actually gave a big promotion to the individual who's been credited with sort of driving down costs over the last sort of 8 years of her employment. But there was a lot of excitement about the kind of management there, and I think cloud revenue is up the better part of 30%. Also, as well, their other, which is quite a small percentage of their revenue, only about a quarter of their billion, but that was up almost 50%, and that's things like the Play Store, YouTube subscriptions, etc. So again, some really promising numbers there coming out, which is impressive. Also, going back to cloud, they're the third largest in that market, but their market share is growing. They seem to be winning business, basically. And although revenue was only, inverted commas, up 7%, you had earnings which were up the better part of 15%. So I think actually this is really impressive. Like, Google at the moment still has very material headwinds. Its other bets also were really impressive. It was just really impressive across the board, I think. The market responded strongly. I still think Google has a lot further to run. Like, if I was to make the decision of who to buy between Games Workshop, Google / Alphabet, and T.Row, I'd probably be buying Alphabet. I just think it's such an amazing company. I think it's got a lot of opportunities, and the fact it's still performing as strongly as it is in difficult markets like advertising at the moment, I think bodes really well for the future. So yeah, if I was to probably pick where I'd be putting more money at the moment, it would actually be in Google of the three, and we'll get onto T.Row in just a second, but that's my opinion. And again, it's got big fat profit margins, and it's got a lot of high growth areas as well, including things like AI, but we'll see how that shapes out over time as well. So yeah, I thought Google's numbers were really impressive. A lot of kind of promise in terms of the profitability specifically coming through as they sort of drive down costs more or less across the board. Revenue up 7% is solid, but I wouldn't say it is as remarkable. I think the share price still would have gone up even if earnings were only up 7% as well, but I just think the fact that earnings rose so well and there was such a highlight about the fact, again, this individual got a big promotion, that they've been really driving down costs at Google, and therefore the earnings have come through really strongly. So very, very impressive in my opinion. And then next up, I just want to talk about T.Row, if I can find them. There they are. So again, a solid one. I actually turned green on T.Row very briefly as soon as the results came out, and then it sort of fell back a couple of percent, and I went back into the red again. So I've spoken about T.Row before as basically a multiplicative. Like, it's going to respond well when the market's doing well, and less well when the market's doing badly, and you're basically going to see the extension of whatever way the market's going. Now, in fairness, it wasn't a flawless set of results. There were definitely some weaknesses in it as well. We'll start with the positives though. So revenue up 6% was solid. Profit actually up year on year for the quarter, so the 3-month comparison up 40%. And a similar story in a way to Google, in that they're really driving down their costs, which ultimately fed through to EPS beating expectations by about 17%. I would also praise the net margin remains pretty strong at 23%, and they have a nice. Actually, T.Row have really done a good job over the last couple of years that I've been following them of sort of making their numbers easier to read. First time I had a look at T.Row's numbers, they was like in a 100-page deck, and it was like really heavy data tables. They now produce a supplementary deck, which is really nice. It's only like 13 pages, and it's a PowerPoint slide. And within that, there's a page where they basically look at certain segments. They have 3 tables by value and percentage, and they basically look at how much they're outperforming other benchmarks across certain time periods, and it's very solid, right? Like, a T.Row are under attack in a way against these sort of very algorithmic, very cheap fund managers at the moment, broad-based, etc. So T.Row basically need to, in the long run, show that they're better at outperforming on average than these to really make sure that they have a strong business. So I thought that was actually solid as well. Like, that, they called it like capital outperformance. I think that's fine. We can call it what we want, but ultimately they're beating benchmarks more often than not. So that was very impressive. So yeah, broadly it's looking good. Less good was the fact they had a net outflow of 20 billion. That's definitely a problem, and it's kind of actually slightly bigger than the last sort of comparable periods. They do expect that to reverse in 2025, and despite that outflow, asset under management actually rose quite significantly, for a business their size, it was only about 4%. But despite that, the assets under management being about 1.4 trillion, which is definitely solid, it remains some way behind their 2021 peak of about 1.7. So still a bit of work to do here. I would say really the share price is sort of up with events now. I could maybe squeeze a few more percent out of this if I wanted to make that argument. I think it's solid, and I think whether you want to buy this will depend on whether you think the markets are going to continue and how much you think the net inflow and outflow position is going to be from that. So, but I think there's a lot of promise here. It's not cheap. When I looked into this, the P ratio is about 17. It is trading slightly below its longer term averages, but not by a ton. And again, I think here you could make an argument for something like 135, 140. So there's a little bit left here, but I don't think it has the kind of run rate way that Google has, for example, where I think you could comfortably add another 20% onto Alphabet at the moment. Maybe that's slightly too bullish, but I would much rather be looking at Alphabet as something like 150, 155. Rather than T.Row at maybe 135, and like I say, Games Workshop at 120. So I think they're all 3 of them good quality businesses, and they've all been around for what seems like a while. Google was the newest of the 3. But yeah, I think basically all 3 of them, I was really impressed with their numbers for more or less different things. Again, there's some overlap with the cost-cutting elements for Alphabet and T.Row. But yeah, I think in order of where I'd be putting my money if I was buying individual stocks still, which I can't because of my wife, I would go Alphabet first, then T.Row, then Games Workshop. But honestly, I think in the long run, all 3 of these are going to be winners. I just think the Games Workshop kind of needs to have a bit of a scare where Amazon looks like it might walk away from the deal as a buying opportunity, because I think like it would cause a 20% plus share price crash, even though nothing would actually change about the business, right? Because Amazon isn't actually producing any income for the business at the moment. So yeah, we will see. Yeah, ASMR mentioned it wasn't very nearly green for being plus 5%, but it just fell away right at the end of the week, so that's fine. Broadly speaking, everything else was moving in the right direction though, so that's awesome. And most of the rest of my data here looks broadly unchanged. It was a nice finish for the dividend in July. You can see here that even though like this is slightly flattered because I had a couple of dividends land on like the 1st and 2nd of the month instead of the 30th of June. So that's slightly flattering. I do have a very quiet August coming up as I've made some changes to my portfolio over the last couple of years. So August I'm not expecting much, and then September should be pretty stellar actually. But we did manage to make just over £300 across July, so again that feels great. And yeah, broadly speaking, we continue to just about track behind the S&P. So as we get closer to our 3-year review, which I'm going to do at the end of December, this will become slightly more intense, I think. But for now, we are doing our best to try and keep up with that. Anyway, that's everything from our financial performance this week. Let's have a look at our non-financial numbers now. Alright, so actually quite a few changes this week. We'll start on the contribution to wealth, which saw a big jump actually right at the end of the month. We had been seeing an increase during the month for things like my wife pensions going in and a few other things like that. But I got paid last week, so that was amazing. And I also had my pension go in from my workplace from the month before. Actually, it takes quite a long time for my personal pension contribution from my employer, as well as my own. It gets bundled and then added together to go in. So that went in actually right at the end of last week. So all of that helped and caused a big jump. So we're actually about 10% ahead of our target at the moment. I do have my daughter's school fees coming up in 2 months' time, so that's definitely going to be expensive because we're paying a quarter in advance, basically a term time. So I do expect it to hit then before hopefully recovering and finishing strong for the year. But so far, I'm really pleased with this part because this is the part that we can control the most, and we're doing really well. So total wealth was also saw a big jump, partly because of those two things that I've mentioned, right? Also, as well as strong performance in the market, basically meant that we had, lots of things contributing to that. So now, having sort of just about reached 400k during the week a couple of weeks ago, we're now solidly above that level. So that's feeling really good. I must admit, I don't expect to hit this number at all. But we're going to see how close we can get to it, right? Again, we've still got half the year left. I've still got another sort of 30,000 to add to this by ourselves, and then we'll see how the rest of the market, etc., performs. But I expect to be sort of between about 8 and 10% short. And yeah, really that's just a result of things not performing as well as I expected over the short term, but hopefully in the long term that will catch up. So I'm going to keep that there until we hit our 500k target, and then we'll update it to 750 and try again. In terms of work, I was super busy this week. I felt like I was constantly on the call, which I found very tiring. I'd actually much rather just work by myself in a basement somewhere or a bar, rather than having to take calls all the time. But lots of things going on at work. I did feel like I was making real progress though, adding real value. So actually I was very happy. My new billing system is up and running, done a couple of bill runs already. I do have a very big bill run on the 1st of the month. Several hundred new customers are going to be in that, as well as our wholesale customers. So that'll be, I'm slightly nervous about that, but in an excited kind of way. So that's going great at the moment. No update on revenue assurance. Propensity to call. Honestly, I had a really frustrating session. My colleague in my team presented the numbers, and although the kind of argument was, I think, valid, I had somebody pop up and be like, oh, where are you getting those numbers from? And it turned out that there's a new data source that got created a few weeks ago that like nobody had told us about. Even nobody had told the kind of guy who's organising the project about it. So even though I suspect that the slightly new format and reporting won't change the overall presentation, it just made us look really silly. Actually, I thought the guy who manages the call handled it really well. He basically said, well, I wasn't aware of this either, right? This is not the way to do it. Let's work with Liam's team. That's me, by the way, Boss Hog. Let's work with Liam's team. Let's come back in a couple of weeks. Let's make sure that the new numbers don't change the arguments, and we'll go from there. I was like, fine, that's the right approach. But yeah, incredibly frustrating waste of time for me and my colleague that we have to like rerun all those numbers. So I felt for my colleague actually because he put a lot of work into it, and we'll try again in a couple of weeks. I might update this team organisation. I have my half-year review in a couple of weeks with my boss, so I might put something in here that comes of that. Broadly speaking, my team organisation is complete. My new starter's doing great, and I'm just making job title changes and job description changes to a couple of people in my team. But that should then take care of everything, basically. So that should be that more or less done. So yeah, I might replace it with something else, but it feels pretty complete at the moment. It's just kind of BAU, run rate kind of stuff. And this is probably where I'm most excited in the medium term. I've started to sort of sell this idea to lots of other people, and I think people are quite excited about it. Um, but yeah, basically being able to understand the numbers from our contracted revenue to our cash collected will just give us so much understanding across what's happening across the business. A lot of the data is available, but it's in sort of disparate locations. Some of it's not, and we need to sort of work with about 6 different teams to do this. I'm actually kind of starting at both ends and kind of building between the two. So sort of started with the contracted revenue as well as the debt. So that's been good. The reason why I'm starting there is because basically in the middle it becomes a lot more complicated. The volumes are a lot bigger as well. Being able to kind of just monitor what's happening for new stuff that's coming in is a lot easier because that's basically a blank slate. And similar as well at the end, I have full data, and I work alongside a finance team, and they have the full data as well. So I'm kind of starting at both ends and then trying to fill in the gaps in the middle, basically. So yeah, I mean, in fairness, I'm looking to complete this by the end of the year. Originally, I wasn't sure I'd be able to get there, but I'm increasingly confident I will be able to get there by the end of the year. So that's quite exciting. Fitness this week. So I was actually quite pleased with my gym sessions this week. I did only go to the physical gym once, which I want to be doing twice a week. However, I did do 2 home workouts as well, and one of them was particularly brutal. I really destroyed myself, just absolutely dripping. But it did feel quite good afterwards, and I just went into like a nice cold bath. But yeah, so I felt really good. That's like the hardest workout I've had for probably in 2023. And afterwards, I actually thought I was gonna be sick at one stage. I really pushed myself, so that felt awesome. Eventually, it felt awesome. It felt a bit rough at the time. My weight's unchanged. Take care of myself. Sleep was quite poor this week. I think my daughter, who's like 3.5, she's like just having very active dreams, so she keeps like waking up quite distressed. So me and my wife have both been having sort of quite patchy sleeps. So what was getting better got a bit worse this week. But other than that, like everything else, I think is going quite well. I'm also getting into the habit of being quite regular in my routine, even when I don't go to the office or need to take my daughter to nursery because my wife's doing it. So just to make sure I'm like out of bed at like 8 o'clock, have a steady wake up, get myself ready for work instead of feeling a bit rough or being inconsistent. So that's been helpful as well. In terms of relationships, we went to the big park again. So there's like a big swing there, and even though I've got quite a young child still, she's a bit of a lunatic when it comes to the swing specifically. So there's like a really big swing, and all the other kids who are like 6, 7, like they seem like more nervous than she is. So just specifically on the swing, she's not always a lunatic, but the swing she just loves it. So I'm pretty sure sooner or later she'll go flying, and I'll feel bad, and she'll have a big cry. But until then, she's absolutely loving it. And I think as well, the other good thing is because it's quite a big park for a small girl, it absolutely wears her out. So like on my afternoon, it's a great way of sort of having. I got like 2 hours. I went for a tapas, did some reading, and just sort of relaxed a little bit. So that was a good way to spend an afternoon. Also, as well, this week I went to a graduation ceremony for my daughter, which was interesting with my wife. I mean, she's basically leaving nursery in a couple of weeks, so that's what they class as graduation. But it was honestly a big deal, and everyone seemed to have some fun. So it was actually quite tiring. I got quite sunburnt, but other than that, it was good fun. Not a ton of updates on my other stuff here. Professional, I guess actually I had a really positive conversation with a headhunter. So basically I got approached for a job. It was quite a meaty job, honestly. I might have been interested in a different timeline, but I'm quite happy with work at the moment. But slightly more salary and a huge increase in bonus, so it was definitely tempting. But I excluded myself before we'd even chatted. But kind of the work she does and sort of the sort of role she's looking for are kind of right up my street. So we had a really good introduction, and that was great. So something for the future potentially, and also I have another chat with a different headhunter next week planned as well. So we'll see how that one goes. But I thought that was good. And specifically this headhunter, they're basically hiring sort of anyone from sort of management to C-suite, but interestingly at private equity-led businesses, which I thought was an interesting thing. So my current business is private equity-led, and yeah, I hadn't really come across that as a headhunting strategy before, but apparently those kind of businesses are all quite similar in terms of their outlook and intensity, basically. So we'll see. That was quite exciting, though. So in terms of regular YouTube videos, I did actually record one, but I only finished it like last night. So I decided I'm going to do this video first, and I'll put that onto my channel sort of Monday or Tuesday. It's basically looking at telco as a sector to invest in, and basically my opinion that it's often not a good place to be putting your money in. I'll explain why, despite the fact that I work in the telco sector, why I don't think it's a good place to put money. So I'll load that up on either Monday or Tuesday, so something to look forward to. I've also, although I haven't been like sort of structurally studying Polish, I've been putting on some videos in the background, like when I've been at home by myself, just to basically do vocab in the background. My Polish vocab is actually pretty solid. Like I remember lots of words. It's just that Polish language is quite complicated, and there's lots of rules and tenses and everything else. It's difficult. You can't just basically rote learn vocab in Polish because the words change depending on the context. So that's particularly fun. But still, it's good to kind of give myself a nice introduction back into it and see if we can go. I'm also flying out to Poland in 3 weeks or so, so it's a good chance for me to sort of practice a bit when I'm out there as well. So both my in-laws speak pretty solid English, especially my father-in-law, but I think everyone appreciates it because everyone knows it's a tough language if you can speak a little bit of Polish. So, and then lastly, just to round up, in terms of my regular reading, I've been reading, it's kind of a book about capitalism, but it's kind of looking back at various things, basically talking about the positives of capitalism and sort of the challenges against it. But I was reading sort of the second half of this book, and it was specifically all on the early days of the Soviet Union, and it was just absolutely fascinating and depressing. So yeah, not a great place to be for anyone in that time. But yeah, so that was interesting, I suppose. Eventually, when I finish that book, I'll do a kind of a review. It's something I've been thinking about doing anyway. I might make that my first book because it's really interesting. But yeah, so that was good. I spent probably about 3 or 4 hours across the week reading, including when I was in the tapas bar. So that was quite good, just to get a little bit of time to do something there. So that was good. I was quite happy with that, honestly, in terms of my reading. So actually, if I'm honest, this week I felt quite good. Considering how busy I was at work, my wife still is only just now starting to feel 100% better. She seemed to get like that illness for a little while. And you know, I had lots of other stuff going on as well, but I feel like actually I made quite good progress this week. Not perfect, but did a lot of good work, and yeah, made some good progress across. So much happier this week than I was with last week, even though I'm accepting that there's still some work to do. Anyway, that's everything for this week, so thank you very much if you made it to the end. I've been the Boss Hog, and good luck with everything. Bye for now, guys.